All right, how's it going, everybody? These are all the companies that are reporting their earnings this week. These are some of the companies that are reporting on a high level. If this is all you care about, then I'll catch you next week. Stay safe and good luck in the stock market. But if you want to stick around, then we're going to go a little deeper and I'll give some commentary, my thoughts and opinions about the companies that are reporting on each specific day. To kick things off on Monday, we have Oracle. Oracle is one of those old school tech companies that has continuously found a way to stay relevant, and most recently they have transitioned their business model to the cloud and enterprise software. Another company that seems to be super resilient, another antique tech company, is IBM. And a little lesser than that is Cisco. Cisco's business model is just the high switching costs, and that's their economic moat in the IT infrastructure space. But IBM, Oracle, pretty wide economic moat in their database management product offerings. I think it's a pretty solid company, but I'm not too interested in them. And then there's also Asana, and then Mission Produce sell avocados and like vegetables and fruits. And I thought it would be a really good time to answer some of the questions that you guys have asked. So Will said, is there a special reason you choose to live in Japan when you could be living in America/Korea? To be honest with you, my partner found a job out here in Japan. She said yes, and so I followed her here. And I've been here now since 2022. So coming up on 3 years, and it's been a pretty good and wonderful experience for the most part, because Japan, for what you get, the cost of living here, super low. It's a high quality living standard, but the prices for everyday items, for vegetables, groceries, things to do, super inexpensive, especially in comparison to the US, where I am from. And I think it was a really good place to live for the past 3 years because we've been able to weather the storm in light of inflation through Japan. Because in Japan, inflation is so small. It's almost non-existent. And the culture, the things to do, the community, there's just a lot to like about Japan. And that's why I'm never surprised when a lot of people have it on their bucket list to come visit and tour Japan. It's a wonderful country. I remember I used to do modeling gigs in Japan like 10 years ago. And I always told myself, if given the opportunity to come live here, I think I would say yes. And I can't believe in my 30s, that opportunity came to be. So it's pretty cool. And then also Soul Search commented by saying, I'm subscribed with all notifications turned on, but this video didn't show up in my feed either. I always appreciate your videos, Amos. I appreciate the comment. And I just wanted to clarify that the past 2 weeks or so, dude, every single one of my videos have been tanking, dropping in views, impressions. However, what hasn't been dropping is engagement. Meaning the people that you choose to watch each video, they're watching it for a longer duration, but also they're choosing to click like. Because if I look at my videos from 6 or 7 or 8 months ago, I think on average I used to get 42, 43 likes, but now I'm getting less views, but my likes are almost consistently 70, 80, 90 to 100. So I think it's a weird trade-off on what is happening, but also YouTube is currently, they're testing out multiple different algorithms. And I think my channel, along with so many different YouTubers, they're also suffering the same hits and decreases in their numbers and metrics. So I'm going to continue to just pump out the content and stay positive because I think consistency goes a long way. And I don't know, it's just the same way that I look at the stock market as well. Obviously, there's times and moments where I'm discouraged, where I'm like, dude, this absolutely blows. I just spent 20 or 30 hours working on this video and it manifested in 300 or 400 views, which it doesn't sound like a lot, but I think social media has completely warped and distorted our perspectives. Because imagine if I was speaking in front of 300 to 400 people. That's how I like to think of it. An auditorium or in a concert hall, and there's 400 of you guys, you're watching me. That's a lot. Obviously, if I compare myself to some of the bigger YouTubers that consistently get 100,000 or 500,000 views per upload, then I am miserable. Then I am sad. But it's a lesson that I'm continuously trying to teach myself. I have to stop comparing myself to others. Because when I only measure myself on my own progress, I'm pretty happy with how things are panning out. Obviously, I'm not happy about the views dropping, but that's because YouTube is playing out their theories on what works and what doesn't work with algorithms. So I'll let them do their thing and I'll just continue doing my thing. And that's why, for those of you that choose to support me on Patreon, dude, I love you so much. This is what I mean by when I say YouTube is super inconsistent. You can't really forecast a financial figure on YouTube because it won't be consistent week over week. Sometimes the views come in and sometimes it doesn't. So if you choose to support me, dude, I appreciate you so much. Anyways, let's move on to Tuesday. Hopefully that answered both of those questions. Tuesday, what do we got? Tuesday, we got Dick's Sporting Goods. We never invest into them. We also have Sienna Core. They provide cables, networking, and routing equipment for telecom companies. I looked at them on a surface level, and I don't think anybody watching this video should waste their time doing a deep dive on this company. Not worth it. I don't really like what I saw, and I don't really like their future. And then there's also UNFI, which is a private label food manufacturing company. And I know a lot about this company because I actually went through 6, maybe 7 rounds of interviews for an MBA job. I made it all the way to the final round, and I had a one-on-one with the hiring manager for an hour and a half, and she really wanted me to start working ASAP. This was during the pandemic. She wanted me to, drop out of my MBA, move to Minnesota, and just start working right away at the office. And I was just like, dude, I don't know if I can do that. I still have 7 months. I want to finish my degree and then I'll go over. And then she kept saying oh, it's urgent. This position, I'm going to fill it if you're not going to come. And I don't know, I stood my ground and I was like, dude, I'm not going to drop out of my program because I don't know if I was going to be able to convert my student status from being a full-time in-person to being an online and then to finish my degree. I just felt like it was a lot of headaches and logistics that I didn't want to bother with. I don't have any, mean or ill will towards UNFI. I still think it's a pretty good company, but would I invest into them? No. I was willing to work for them, which I think is pretty funny. UNFI. If you feel bullish about the private food label stuff and products that you see at Target, Costco, Walmart, some of those are manufactured and made by UNFI. Pretty interesting company, but would not invest into it. And then we also have Brain Sway. I had literally never heard of this company, so I started looking into them, and they're pretty interesting. So this is a lesser-known medical tech growth company that's trying to eradicate depression, OCD, and addictions through their transcranial magnetic systems. So by rewiring your brain through a non-invasive way. I think it's pretty cool, and I wish them good luck. But fundamentally, I don't know about investing into that. The investing thesis sounds good. I really hope their future is bright, but their financials and fundamentals, I don't know, man. But I think it's just one of those companies where I wish them good luck, but as a potential investment, not really my thing. And then also Tuesday, we have Ferguson. And then there's First Watch Restaurant Group. Do you remember I talked about them a week or two ago? And I said this is probably pound for pound the best breakfast-oriented restaurant chain out there. Because their business model, I think it's operationally really optimized. An optimized operational business model. Damn, that sounds like a stupid thing an MBA guy would say with his super PowerPoints. But they operate some of the best breakfast restaurants that are available in your town. Pull up Yelp or pull up Google and search best breakfast food, and that they should pop up, one of their subsidiaries or First Watch. Basically, they only operate from 6 a.m. to 11 a.m., and then the rest of the day they shut down, which means their overhead costs, their human capital, their other expenses are kept to a minimum, whereas their earning potential is maximized because they only sell breakfast and brunch. This is a company that I used to be invested into when they first IPO'd. I made a tiny profit and then I jumped out of it. But I don't know why I don't have it highlighted. If given the right opportunity, I think I would buy back into it. I think First Watch is pretty good. It's a sleeper. Nobody talks about it. Nobody even knows about it. Think of it as Texas Roadhouse 5 or 6 years ago, before anybody knew how good Texas Roadhouse was. That's what I see in First Watch. Their economic mode, their financials, their fundamentals, their business model, everything is pretty sound. They just don't pay a dividend. And that's something that you need to be mindful of. By the way, I'm still wearing a winter jacket. The situation hasn't improved. Japan right now, it's like 27 degrees Fahrenheit, super cold, and there's a crap ton of pollen. So I choose to turn off my heaters because I noticed that when I keep the heaters on, dude, it like pumps and pushes in so much pollen. My eyes get bloody red. My throat is super itchy. So I would rather be comfortable by just turning off the heaters and then just wearing a winter coat. And one of you suggested that I should get a HEPA filter, and we did just that. We went to the thrift store and we picked up a HEPA filter that helps eliminate some of the pollen that's floating around in the air, and that's been helping a lot too. So if you're wondering why I'm wearing a winter jacket, that's why. And yeah, pretty funny. And then we also have Korn Ferry. This is another company that I went to the final round with during my MBA job recruiting, and then it just didn't work out. Anyways, they are a headhunter consulting firm that helps companies find executive level talent. So say like your CFO got fired because he was manipulating and fumbling with the numbers. Usually the CFO is a scapegoat and they fire him. Whereas the real person that was messing with the numbers usually is a senior director or some of the minions, like the senior managers. They were like, okay, they're the ones doing it, but it's usually the executive vice presidents or the C-suite. They're the ones that take the hit and they get fired. And then Wall Street rewards them. They're like, okay, maybe the scandal will go away. But usually when a company starts doing financial fraud and manipulating the numbers, if that's in their DNA, dude, stay away. But anyways, Korn Ferry helps companies fill in those positions. You're not just going to go to LinkedIn or Indeed.com or use a normal recruiting methodology. When it comes to hiring people and their compensation packages, that like their base salary is going to be like $900,000 and they get stock options. Their total compensation for a single year for the C-level suite is going to be like $2-3 million. And so when you're going to invest that much money into a candidate, you want to make sure that you're hiring the best qualified folks. And in order to do that, you usually have to, I don't know if this is a good thing or not, but what you got to do is look for the best and the best and try to make them quit their company so they can come over to this company. What happened is, an example that I can give you is Chipotle CEO. Literally, I think the headhunters from Starbucks, the consulting firm that they might have hired, I don't know if it's Korn Ferry or another company, but they approached them and was like, dude, can you come over to Starbucks and help put out these fires? Starbucks is a hot mess right now. If you're willing to come over, we're going to make your life super pleasant. And yeah, he ended up quitting Chipotle. Chipotle, one of the biggest, most beautiful, darling restaurant businesses in the stock market. He left that to go to Starbucks. So all in all, that's what Korn Ferry does. And they also have some like leadership development paid sessions. I remember taking a few of their surveys to figure out like my leadership style back in my undergrad and during my MBA. So they do a whole boat of things, but they're mostly known for the headhunter business segment. And then there's also Groupon, which I remember like 15 years ago, super relevant. If you ever wanted to sign up to go do something like karate classes or for a sightseeing tour, you would go to Groupon to get like a coupon for like $20, $30 or 50% off or a buy one, get one free. Like that was the go-to place. But I don't know what really happened to them. Throughout the years, they just kind of fizzled out. Nobody really utilizes Groupon anymore. In my humble opinion, I think Yelp and Groupon should join forces and just merge. I think both of their business models are under threat by Google. Because if you are a small business owner, I feel like maybe 10 years ago, you would have paid the subscription fee through Yelp in order to promote your business. But now we're realizing that the traffic and the engagement and the audience, they would rather just Google something. And if it pops up, they'd rather just click on it through Google than go to a third-party platform, Yelp. All that to say, I don't feel bullish about Groupon. If you're invested into them, I'm sorry, but that's my opinion as to why I personally wouldn't invest to it. If I'm wrong, let me know. Because I'm always willing to listen and change my opinion. I'm not stuck in my own ways. Whenever I'm wrong about something, I am gladly willing to admit it. By the way, the other day, someone told me like, dude, I used to watch your channel. I think you're a good YouTuber, but dude, you're trash because you brag about how great you are now. I don't watch your content anymore. And I thought about it. If I ever came across that way, like if I'm a humble brag or conceited or narcissistic or how good I think I am, let me just clarify right now, dude, I'm an idiot. I'm so stupid. Watch my life story video that I uploaded a few weeks ago. You will quickly see that I'm not that smart. I make terrible decisions. I'm stupid. I get emotional sometimes. And at my age bracket, dude, I'm nowhere near where I thought I would be. I'm in my mid-30s. When I was in my early 20s, dude, I thought I would be so much more. I thought my net worth would be more. I thought I would be happy living life. But here we are. So I'm going to say it again. I am not great. I am not good. I am not smart. I am not anything spectacular. I'm just a normal dude who's trying to find purpose and meaning in life and just find fulfillment in the day-to-day. And I just like the stock market. Just think of me as an average dude who's talking with you, okay? Yeah. And if I ever came across like a humble brag or conceited, I apologize. That was never my intent, okay? Anyways, to round out Tuesday, we also have Stitch Fix, which is a pretty interesting business model. If you're one of those people that is trying to figure out your style or your wardrobe, this is a company that will, depending on how you fill out their survey and through their AI system, they'll send you a box of clothes every month. I think you can keep it or exchange it or rent it. Yeah, so every single month you could have a new style. That way you always have new outfits rather than having to, do the pain point of going shopping and figuring out what works for you and what doesn't. These guys have it all figured out. By the way, I feel like if they want to sponsor me, dude, Stitch Fix. If you work for Stitch Fix, dude, hit me up. Dude, hit me up. But anyways, there's also Allbirds. This is the tech bros' favorite shoe. I feel like if you work in the finance or tech industry, you're wearing a pair of Allbirds because each pair costs like $5,000. I think realistically, it's like more or less $100. And I wrote in my little notes here, people talk about Crocs not having an economic moat, and that's why right now they have like a single-digit PE ratio. I think Crocs is fundamentally a really solid company, but people keep thinking like, oh, their hype and fade is just going to disappear. It was just a boom during the pandemic. See, here's the thing. When people look at Crocs that way, that's how I feel about Allbirds. I think during a specific 2 years ago or whatever, like Allbirds, super popular. I get it because they make their shoes out of materials that are all natural. I think they're sustainable, something like that. I get it, like their mission, their product is good. But Allbirds, like the next 10 to 20, 30 years, dude, I do not believe in them. But when it comes to Crocs, man, I believe in Crocs. I'm telling you right now, if Crocs were to pay a dividend, I would invest into it. I would put my money where my mouth. Is that the phrase? I gotta look it up one of these days. I would put my mouth where my money. Anyways, I would invest into Crocs if they paid a dividend, but they don't. But that's how I feel about Allbirds. Not really bullish on them. Moving on to Wednesday. Wednesday, I think, is a busier day than Tuesday. Actually, that was a lie. As you can see on your screen right now, there's not much going on. I mean, these are the companies that I thought were relevant. I think there's a lot more. I think there's over like 100 companies reporting on Wednesday, but I filtered out all of the nonsense and all of the noise. These are the only ones that I think are relevant. First up, we have Arcos Doritos. Dude, I was like, what is this? I thought it was the gas station company, the oil and gas company, but no. This is the largest McDonald's franchisee operating in Latin America and the Caribbean. So you know how there's like side plays, I guess like parallel investment options, like instead of investing into Amazon, if you think it's too expensive, you can invest into the packaging and cardboard companies instead, because their business model is predicated upon Amazon's e-commerce booming. Likewise, if you think McDonald's is too expensive and you would rather invest into the franchisee with the boots on the ground that's actually running the operations, then you invest into Arcos Doritos. Am I pronouncing that right? Dorados. Dude, I took Spanish for like 5 years. I'm still ass. I can't even say, hold on, Dorados. Arcos Dorados. But anyways, that's what you would invest into. For me, I don't feel particularly compelled to invest into a franchisee. I would rather invest into the one that's getting the royalty checks from the franchisees. McDonald's. Yes, I'm invested into McDonald's. We also have iRobot, which they're the parent company of Roomba. You know, the vacuum that goes around your floor, sucking things up. Even after you leave nasty fluids everywhere when you blow your nose and it rips right through the tissue paper and lands on the floor. Your Roomba is the one that cleans it up. No, it's not Roomba. Roomba's the one that sucks stuff up. Keep it PG. They suck stuff up. But they also have another robot that mops the floor by itself. I think it's pretty cool. Investing into it? No, absolutely not. We also have eHang. This is a company that super hyped up a few years ago. It's a Chinese company that's developing self-driving aerial vehicles for the robo-taxi space. Very similar to Joby Aviation and Archer Aviation, which are the American equivalents of trying to build a tiny drone-like helicopter that can transport people from point A to point B. And it's based on so much speculation and hype. I used to be invested into Joby, so I did a lot of research and I looked into it. And I'm like, dude, it's just way too much rhetoric and hypotheticals. Like they actually have a working prototype, but the amount of legislative hurdles and obstacles in their way. Because can you imagine a drone that is flying people from rooftop to rooftop alongside with the natural highways and sidewalks and trains and stuff like that? Dude, there's a lot of hoops they need to jump through. And if you're willing to stick around for all of that, I think in the next 20, 30 years, I think it's going to be a reality. But in the short term, I don't feel particularly bullish about aerial vehicles. That's how I feel. Because I wrote in my notes right here, with all of the regulations, holding down their ankles, they're trying to walk, but they're holding onto their ankles with air travel. I'm in particular more bullish about Google's Waymo. Waymo is a subsidiary of Alphabet. They're in the business of trying to figure out how can a car drive by itself from point A to point B while taking into consideration traffic, pedestrians, moving violations, and they can sell that software and that technology to different car manufacturers, and they can put Uber and Lyft out of business eventually. But I think eventually, why am I saying the word eventually so much? I think with due time, Uber is probably going to partner with Tesla or Waymo and be a superpower together instead of wanting them losing. I think it's one of those things where everybody is going to benefit from the progression of that space. And I say that because Waymo is live right now. You can use their service in Phoenix, Arizona, San Francisco, Los Angeles, and I think Austin, Texas, and a whole bunch of other cities. It's already live, up and running. Whereas with like Joby, eHang, and all these other aerial drone companies, I don't know. I mean, like, I'm bullish about the future, but when you think about the logistics and the regulations you need to have in your favor to have that pan out, I don't know. Not really my thing. We also have ABM Industries. For all of the corporations that I've ever worked for, when I used to go into an office, yes, I look like an idiot right now, but believe it or not, I used to be a corporate guy. All of our janitorial services were provided by ABM. So that's what they're particularly known for. They do a whole boatload of other stuff for their corporate clients, but in particular, why am I saying particular and essential? Anyways, I associate them with helping corporations, businesses, warehouses, and fulfillment centers to stay clean through their janitorial staff. So if you're bullish on people coming back to work, because I think a lot of companies are rescinding the whole idea of working from home, remote work. And so as a result, you're going to have an office. And if you have an office, you're going to have to keep it clean. So if you're bullish about that sentiment or investing thesis, ABM makes sense. Would I invest into them? To be honest with you, I would, but only at the right price. I think to buy into them, dude, I would need a huge margin of safety. I would need like a 50% margin of safety because when it comes to like waste management, recycling, and all of that, I would rather invest into Republic Services or waste management rather than like janitors. Not trying to downplay them. My mom was a janitor growing up. But I just feel more bullish about the future prospects of recycling plants and landfills and stuff like that. But right now, I think they're way too overvalued. If you're eyeballing Republic Services or Waste Management or any one of these trash companies, I don't know, man. Their trading multiple is just way too much. It doesn't make me comfortable. And then we also have Adobe. I have this one highlighted because I am invested into them. I think they're undervalued right now. And on a high level, Adobe does software for the creative professional, for video editing, photo editing, you name it, that's what they do. And there's a lot of fear surrounding this company right now because there's a narrative and rhetoric around Wall Street that AI is going to make their products obsolete. Because why should someone sit there to edit a video through their software when AI can just do it for you? That's the stupidest reasoning I've ever heard. Because as a guy that spends maybe 30 to 50 hours a week editing videos, I can tell you that AI helps us, like assists us and supports us, but I don't think AI can do the whole process start to finish. I made a deep dive video talking about Adobe, so if you're curious as to why I decided to invest into them during their sell-off, you should go ahead and watch that. And I just, people are so short-sighted because you think Adobe is really just going to sit back and allow their business model to become antiqued and irrelevant. No, they also are augmenting and implementing AI into all of their software and platform and tools. So for me, I'll pick up shares of it. And I really want to know how Wednesday is going to go for them because depending on their message, depending on their sentiment and guidance, I might pick up a share because they are really expensive. But if they do crush it, I'll be happy. We'll see. I could be wrong. Remember what I said. I'm an idiot. I'm not great. I'm not good. I can't believe I have to say that frequently, that I'm an idiot, because I was misinterpreted as conceited. Man, crazy. There's also Crown Castle, ticker symbol CCI. I am invested into them. I have it highlighted. They're a REIT. So it's a real estate company. They own a huge portfolio full of cell towers, fiber networks. But right now, word on the street is that they are looking to divest or sell all of their fiber business. And I think there's like 5,000 or 7,000 of them. So it's going to be a huge chunk of their portfolio going bye-bye. And that's actually what Wall Street wants to see happen, because when you think about it, it takes a ton of CapEx to expand and maintain the fiber network. Whereas their cell towers, dude, that business segment, super profitable. And it has high margins because in the past decade, they have maintained about 40,000 cell towers. They didn't grow their portfolio of cell towers. It's remained at 40,000 for about 10 years, but they increased their cash flow. And I think that's why their price is being really depressed in comparison to their peer, American Tower. Because they're not trying to do fiber. They're just staying with the very profitable business model of cell towers. The CCI had the really bright idea back in 2015 of trying to diversify and going into the fiber optic space, and it didn't work out. And that's okay. We make mistakes all the time. It's what are you going to do now? You have made this mistake. Are you going to double down and go further into the red and allow it to kill your margins and your business? Or are you willing to sell it? If you made a mistake, it's okay to sell. So the point that I want to make is they don't have to build more towers in order to grow their money. And it's not the best rate out there, but I think it's above average. And I think my cost basis for them is somewhere around like $90. I think right now, personally, I think it's a good time to buy in, but I don't know. I could be wrong. I could be an idiot. If they do decide to sell the fiber business segment, I think they're easily going to jump up like $105, maybe like $100 a share easily. If they do decide to say, you know what, we're going to stick it out, we're going to remain diligent in our original investing thesis with the fiber network, I think they're going to go on a sell-off. Wall Street wants to see them sell it. Okay, moving on to Thursday. Thursday, there's a lot of companies, but again, I narrowed it down to the ones that I think are relevant. We have Dollar General, which I made a deep dive video about them because their fundamentals, their financials, it looked pretty solid, and they looked to be undervalued on surface level. But based on my research and homework, I just I don't know, man. So I'm not invested into them, and that's why I don't have it highlighted. There's also Weibo, which is the Chinese Facebook, literally the social media king in China. And remember, China has over 1 billion people, right? We think of the US as being giant. No, we only have like 340 million people? China is 3 times the size of the US. And this is their king social media platform. So, yeah, not interested in it though. There's also Build-A-Bear Workshop. You know, if you ever go to a mall, it's the place that you can walk into and you can custom make a teddy bear. I remember when I was growing up in high school or whatever, it was the thing to get your girlfriend, right? You would get her a custom-made teddy bear. And public service announcement, if you didn't know, if you are expecting a baby, you can take your kid here on their first birthday to get a custom-made teddy bear for only $1. And I think that birthday promotion works up to age 14. So even if your kid is like 7 or 8, I think that's something that they would really enjoy 20 years from now when they look back when their dad took them to the Build-A-Bear Workshop to get them a custom teddy bear. Maybe when they're like 12, they won't appreciate it at the time. But once they start seeing the gray hairs develop on your head and they get sentimental about all the crap you had to endure, like, dude, as men, we have to always constantly do the right thing and the good thing. We never get any praise. We never get any recognition. It's only in due time, like once we get old and frail, that people around us, they realize our sacrifices, right? So if your kid's like 13, you would pay $13. So it's something you can look into. There's DocuSign. I don't know how their business model is relevant. I really don't. Literally, they have this patent around being able to sign a document digitally, and then you can send it to someone else verifying, like, this dude signed this document. Like, how is their business model still panning out? It blows my mind. There's Ulta Beauty. I'll say it again. There's YouTubers out here who think it's the next big thing, the best thing, and I'm like, dude, this company's trash. I would not go anywhere near this. Coming from a guy that used to be a skincare model, I will tell you, Ulta, trash. No bueno. Let's move on to Friday. What do we got for Friday? Honestly, no company worth your attention. But with that said, what I did want to talk about is I started to read a fantasy book. It's called The Name of the Wind by Patrick Rothfuss. Dude, this book slaps. So if you are one of the few viewers who enjoys books, watching my video, this one I can wholeheartedly recommend. And if you have read it already, what do you think? I heard that I'm going to be in for disappointment because there's a sequel, and apparently there's supposed to be a third book for this trilogy, but the author has not released the third book, nor does he intend to do so. So that's kind of sad to know. And what else? Oh, also, my Tottenham Hotspurs, dude, the other day they played against, I can't pronounce it. It's AS Alkmaar. It's a Dutch football team for the Europa League. Dude, it was the worst. Not the worst, but it was so freaking boring. There was no passion from the Tottenham Hotspurs. We were just, I don't know what it is. Like, we lacked the creativity to create an attack or like to create a goal opportunity. So, super sad, disappointing. This season for Tottenham Hotspur has just been a crap show. Yeah, sucks. Anyways, so what's my game plan for this earnings week? Well, let's talk about it, right? Warren Buffett, he sold out of all of his S&P 500 holdings. We investors refer to the S&P as the market. He feels absolutely bearish about the stock market in the short term. He's holding on to cash because he's expecting and is anticipating a market crash, a correction, a recession, a depression. That's what he's thinking. Because why else would he be holding on to that cash? So that he can swoop in and start buying companies when they're discounted. But to that, I want to say this. With Warren Buffett, just because he's doing that, some people are copying him. But he's one of those individuals that's prominent and is influential. However, with him, you need to think about this as well. For him, it's rules for thee, but not for me. Do as I say, but not as I do. So for him, I'm personally not going to copy him because he said it multiple times in his Berkshire Hathaway investor meetings. I used to watch all of those videos. They're like 3 or 5 hours long. I used to watch the ones from like 1980 all the way up to like 1999, and he said it multiple times. We shouldn't copy what he does. Instead, we should, take his teachings into practice, do as he says, not what he does. And for him, it's more so to buy the dip, to buy undervalued companies at a good price, to do your discounted cash flow analysis model to figure out, is it a good time to buy into this company right now or not? And so for me, my game plan is every single week, I'm just going to continue to do what I've been doing. Obviously, fear and panic gets the clicks and gets the views. So many of my peers out here have flames all over their thumbnails, say this is the last time or last chance to buy the stock. Dude, it annoys me. I'm not going to do any of that crap. Instead, I'm just going to continue to dollar cost average every week into companies that I think are undervalued. Okay? That takes the emotions out of it because I know every week I'm going to buy into a company, depending on my watch list. It can vary. It takes the emotions out of it. If I stay emotional, then I'm never going to be able to buy anything. Fear, doom, and excitement, and all of this will cloud my judgment, and I won't be able to think straight. But if I look at the numbers, their financials, their fundamentals, their economic moat, and I look at it objectively, then I can buy into a company and remind myself of the investing thesis if it goes further into the red. Because if I'm correct, then eventually it's going to be a rebound, and they're going to go up into the green. It just takes time for the market to catch up with your investment thesis about a particular company. And with that said, I'm not talking about the crappy ones that are going on a sell-off. They're going on a sell-off because they are a crappy company. But I'm talking about the really high-quality companies that are currently on the dip. Like as of right now, off the top of my head, I would say Google, I would say Microsoft, Amazon, I think it still has a lot more room to go. I'm personally thinking about jumping in once they hit like 170, 165. I think Amazon has a lot more room to go. But yeah, off the top of my head, those are the companies that I think are high quality and are discounted right now. And I wrote in my notes here, timing the overall market is also very difficult and almost impossible to do. Timing when to buy into individual companies, I think it's easy. Right? You just figure out their intrinsic valuation. You look at their 200-day simple moving average. You look at their Bollinger Bands, their RSI. You look at their forecast. You look at their past 52-week data. You take all that into account to figure out, okay, this is a good price to buy it into. And then you also apply a margin of safety. Like if this is their intrinsic valuation and they're currently on discount by 30%, their 52-week low is this price. So doing it on an individual level for an individual company, I think makes sense. But timing the overall market, dude, that's too hard. Because if you choose to sit on the sidelines with your cash, you could also miss out when the rebound happens. Because when the rebound happens, dude, I saw the pandemic, a sell-off, and then the rebound, it happens way too quick. You're going to think it's going to be a dead cat bounce and wait even more, and then all of a sudden you missed your opportunity to buy into the companies that were 30, 40% off. I'm just trying to tell you, dude, if you're trying to time the market overall as a whole beast, super hard. And besides, when I think about it, bear markets, even if we are going into a recession or like 6 to 9 months of trading flat or into the red, it's temporary, right? Past performance is not indicative of future gains, but if anything, what I've learned in the stock market is it keeps going up eventually. Not immediately, because we could be in the red for another 6, 9, or even like 15 months, worst case scenario. I guess worst case scenario would be like 2 years. But if you have a long-term horizon like I do of at least 5 or 10 years, dude, you're going to be fine. This is the chance right now to buy discounted, high-quality companies on the dip. Why did I say discounted? I meant high-quality companies on a discount. So even though bear markets are almost always going to be temporary, at least it has been here in the US, not in Japan, not in other markets, but in the US, bear markets are always temporary. Growth in the market in the long term is almost always guaranteed, like 99.9% accuracy based on what has happened historically. And besides, it takes time and consistency for our compounders to do the heavy lifting. I can't just buy into a company and expect it to 2x in 2 weeks. That's not how it works. When I buy into Google or Microsoft or some of these other high quality companies like Pepsi, it takes time for them to do their job and for them to grow and compound my initial investment. All that to say, I think I'm preaching to the choir. If you watch at this point, you already get it. You're like, dude, I get it. I just need more cash to buy these companies. I'm with you. Anyways, I love you, man. Good luck. Stay safe in the stock market, and I'll talk to you next time. And I appreciate you, watching the video, commenting, and clicking like. I really do. Yeah. See ya.